not really accustomed speaking to big groups, so apologies in advance. Thank you very much for inviting me to come and talk. It's an honor to be here. I was asked to come and talk about my outlook in 2025 for the local equity market, and that was a very difficult proposition for me because, first of all, as we all should know, investing in equity is a 20-year journey. It's not a one-year journey. And so thinking about it in individual year-to-year increments is difficult, especially in the context of Trinidad and Tobago, where we have systemic issues. So essentially, talking about 2025 with systemic issues is like throwing darts, right? So it is really guesswork. So what I thought I'd do is, now I am older than most people here. So I've been around for a while. And so, I've lived a lot of what we're going through now. So what I thought I'd do is share some thoughts on, and it's going to end with my outlook on 2025, but share some thoughts of what I think are the systemic issues. And then using that as a platform to encourage discussions about what we can do to change the local equity environment. Because as we know, it's not vibrant, has not been vibrant for a while. So let's try and change that. So as I see it, these issues can be broken down into three main areas. And I'm going to try and, don't have enough time to talk about each one in detail, but just to raise certain points. So the first is demand, second is supply, and the third is the cost and the ease of doing business in our industry. So from the demand point of view, three main items. We have the interest rate parity conundrum and the FX issue. Second item, for whatever reason, we have a comparative return issue. So if you look at other asset classes, there's a serious issue with comparative returns. And then the third issue, which I don't think many in this room would think much about, is the number of humans we have doing this type of work. So I'll deal with the first one, the interest rate parity and the FX conundrum. If I were to look at the TTD yield curve, 1 year, recently, discount rate 358, effective yield 4%. Yeah, thereabouts, right, good. And then I were to look at 1 year tri-top 26s. The index on 1 year tri-top 26s right now, 640 to 690. So we're talking about plus 250 over the TT dollar equivalent. And then I look at the longer yield curve, similar thing, it's plus 300. And then I look at the US short term, 4.25 to 4.5, as I think the target Fed funds at the moment. And we have a repo rate of 3.5%. But then if you ignore the repo rate, because I think that's an academic rate, and you look at the more relevant rate, which I think is the 1 year TTD, there's no premium. So where's that premium gone? So what results is rational behavior. So you have funds, you look for a return on your funds, whether you're a fiduciary or you invest in personally. You're looking for a return on your funds that gives you the best risk-adjusted return or bang for your buck. Okay. Oh, and this is not going to get any better. It's not going to pick up with any positivity. Comparative returns. Now, these numbers, we recently did a lot of work looking at the local markets simply because we're now members and we want to be very active members locally. So, TT Composite, 5-year return, negative 3.25. 10-year return, 3%. 20-year return, 3.1%. S&P 500, 5-year return, 14.4%. 10-year, 13. 20-year, 10.4. And then, just to throw it in there, GOT, TT dollar paper. 5-year return, on average, 3.75. 10-year return, 4.65. And 20-year return, almost 6%. So essentially, if I bought a 20-year GOT, sat on it, I would have made twice as much as owning the composite over 20 years. Okay. By comparison, 20-year inflation rates, 5.1%. So my real returns are positive by owning GOT and negative by owning a TT comp. Okay, finally, on the demand side, sorry, and again, it's not going to get better, is the number of brokers. I grew up on this side of the business in Trinidad. Spent a brief moment in my life, about 5 years, on the sell side in Toronto, but I've always been on the buy side in Trinidad. And when I began with Michelle, who I see there at Republic Bank, there was one less broker than there is today. And so let's do some sums, right? So we have 220 working days in a year. We could service, each human could service 300 people per year, just because you need to talk to people and provide advice. And we have 8 brokers, and let's be wild. Let's just say each broker has 10 humans, which is not true. 10 humans talking to clients. No, literally. These are not back office, these are not compliance, these are not finance. This is just 10 humans talking to clients. If you multiply those sums out, you will come up with a very small number of humans that are being talked to about our local market. And I did the sums, and it worked out to be something like 24,000. Well, the unit trust has, I think, over 600,000 unit holders. So that's to tell you how little we are doing as brokers. Now, there's a reason. Now, all of these things, by the way, they all come back to rational decisions. These are all, I've not said anything irrational, nobody's behaving irrational, it's all rational, right? So if I look at the volumes last year on the TTSE, 840 million. So, because you do both sides of the trade, multiplied by 2, 1% average commission, that works out to be about $16 million total top line for the entire industry. 60 million TT. Divided by 8. Now, not all of us are equal, but divided by 8 is 2 million. Divided by the same number, 10 advisors, if we had that. You know, you get 200 grand an advisor. How are we going to make money? So because we're not making money, we're not putting in assets, or we're not putting resources behind it, so it becomes circular. Yeah? Everybody following so far? All right, good. Let's get to another side of the equation, which is the supply. Now, this is where I had a lot of fun, because it's not my wheelhouse. This is more Ishan's wheelhouse. Ever since I have returned to Trinidad, we have had between $6.5 and $7.5 billion in excess liquidity. Yeah? Ever since I returned to Trinidad, we have, well, a little bit after I returned to Trinidad, because when I really returned to Trinidad, we were trading we train a lot of T-bills, because a lot of y'all in the room don't know this, or are not old enough to know this, but it wasn't so long ago where our local treasury bill was 7.5%, 8%. In fact, when I started my career with Michelle, we were trading T-bills. We used to do something called INCs, investment note certificates. Wholesale rate was 9.5%, 10%. We were raising wholesale deposits at 9.5%, 10%. Our special clearance desk, if you're bankers in a room, was a real thing because you were short often. So interbank was a real thing. Now, when's the last time we had a problem? So $6.5 to $7.5 billion in excess liquidity creates distorting capital allocation decisions. That's the reality. And unfortunately, we have let it fester for a long time. So, some numbers. 15 years ago, market cap of the TTSE was 78.5 billion TT. Today, 100 billion-ish, give or take, right? Total loans in our system. Oh, by the way, Central Bank has awesome statistics, right? They have a lot of information. Total loans in our system 50 years ago, 50 billion. Total deposits, 50 billion. Today, total loans and total deposits are roughly 100 billion each, right? So, if you have so much excess liquidity and your cost of lending or the cost to the borrower is so low, it's a natural, rational decision to max out on your loans. Compound that with, and I mean, again, rational, right? So I'm not picking on banks because they did a great job. But rationally, if the banks could come to, let's say I had a son who wanted to start a business. I have some cash in the bank. My son really should look for equity capital because it's a new business. But instead of doing that, I go with my son to the bank and I say, listen, I will cash collateralize this loan. You lend my son $1 million. You lend my son $500,000, whatever the number is. That's good business for the bank. They make a nice positive spread. And my son makes out like a bandit because instead of paying 25 or 30% cost of equity, they're paying 5 or 6% cash collateralized debt. Again, that's rational stuff. Okay? So our market, and just by contrast, so I was curious, what's it like in Jamaica? Is it Jamaica have the same problem? Well, Jamaica's equity market is almost twice the value of their loan market. So, said another way, and you look at the US, which is like the real world, is almost 3 times. So, said another way, there is more than twice the amount of wealth stored in equity in Jamaica than there is in deposits versus our 1-for-1. All right. Second issue, and it's a kind of weaker issue, and it's kind of nebulous, but there's a lot of crowding out that happens in our country. The proportion of GDP that is represented by government spending is about 30% of the total, whereas global average is 16%, and by best in class, which would be Singapore, is like 7%. So we have a government budget, and again, all rational. I'm not criticizing the budget. I'm not doing any of that. I'm just saying it competes for resources. And so because we have been blessed as a nation to have created this much wealth through our oil and gas sector, we are allowed to spend as a government. But that has consequences, and those consequences are crowding out. So the government then competes with us in the private sector in a way that they don't necessarily do in Jamaica, right? Because Jamaica is a different situation. So that is an issue. Okay. Ooh, all right, this is feeling kind of heavy. Final issue is the cost and ease of doing business in our market. The mere thought of filing a prospectus, right, everybody knows what I'm talking about. We have to get better at doing that. And I'm not criticizing. I'm just saying that we need to do better. For all the good reasons, it takes too long. For all the good reasons. Because everyone's trying to do the best. But we have created an environment in Trinidad that is distrustful. Everything that we do, we assume someone is trying to do the wrong thing. I prefer to live life the other way, I think of 1,000 people I meet, 995 are going to be good humans, and 5 are going to be scallywags, right? So that's how I live my life. So we need to think more like that. Stop being suspicious. Most of us here want to do the right thing. So try and get things through a lot faster. And then it costs. Someone is trying to increase the cost of being a broker-dealer by 300%. Now, for large brokers, it's going to be okay, right? But can you imagine somebody that did the sums, right? $2 million top line, because they have 1/8 of the market share. And then you charge, and that person has 10 registered brokers, and you want to charge that company $300,000 a year. That, I mean, you put him out of business, or her out of business. So we have to do a better job at that. And then what we charge for, and I'm going to say sorry in advance, but you imagine, right? I get married. So, like any person would want to do, I want to join all of my accounts with my wife, right? So I go to the bank, no problem, sign a lot of paper, but sign, get that done. But I have a stock brokerage account. To join my wife to a stock brokerage account cost me 21 basis points from the stock exchange, and then just for good measure, the broker kicks in another 1%. And you see, we don't think about it, and I understand that's rational because you had to make a living, and put throughs are like the real good way of making money and not doing much work. And so I get that, but what you don't realize is that hurts liquidity. The easier we make it so that my shares go to 5 of my children, then we have 5 more people in the market. That's what we're trying to do. We're trying to broaden the market. Anyway. Uh-oh, phone locked. Do I want to say anything else? Because I'm now getting good, right? No. I am really hopeful. And we are blessed. And I mean, this country, I'm a proud Trinidadian, and we have something that I've never experienced anywhere else in the world. And because we are blessed because we are wealthy, we have $100 billion in deposits. 6.5 to 7.5 of that is just surplus. Our job on the local equity side is to try and get some of that out of the banking system and into the equity system. If we do, and I'm not saying we will, God forbid, we got a depreciation, you'd want to be in equity. Because if you're in cash, or if you're in deposits, or if you're in, bonds, you're going to get a 1-for-1 cuff. Whereas at least in equity, most of the companies are long USD. So just as happened in 1992, I believe, under Manning's first administration, the companies that are long USD do okay. And so the licks you get in the depreciation and your investment portfolio is mitigated by the extent at which they're long USD. Yeah, that's it for me. But so sorry about the tone, but thank you again, and I wish everybody a wonderful evening. Thank you.